Good morning, traders. It is Sunday, September 29th, and it's time for our weekly video. As always, we're going to review the previous picks. We're going to see how they fared, do our market analysis, and then we're going to find some new picks. If you like my content, please give it a thumbs up. It helps me reach more traders. So, these are the stocks that I've recently highlighted. To be fair, I've had some longs and shorts because we've had some news events coming out, and the market's been very, very news driven. So we've had to have longs and shorts ready, and then we had to wait for the reaction to those news events. So we have focused on the long side because the reactions have been positive. So I'm not going to feature the negative ones, but if you want to go back and take a look at those videos, you'll be able to see that in almost every instance, those stocks might have moved higher, but very sluggishly, and some of them are even moving lower. So we didn't need to focus on the short side because the reactions have been good. These are the stocks that I've highlighted. APP was a stock that I highlighted way back in here about 2 weeks ago. And you can go back and look at that video. I loved this breakout. Spoiler, I like APP. That could be my pick of the week again, but we'll get into that in just a bit. Look at that run. It has gone from roughly, call it $97 to $127. What a move. So I still like APP. Then I did a Thursday video and I highlighted Meta. This is about a week and a half or so ago. It was in response to the FOMC statement. You can see how Meta has continued to move up. Okay, it's not a huge winner, but in general, the price action has been very positive, especially when you take it in the context of what tech stocks have been doing in general. They've been relatively sluggish, relatively weak, but Meta has been able to break out to a new 52-week high. I like Meta. ARM. That was a stock that I highlighted last week. This was on Sunday before the market had opened. Let's go into a 15-minute chart. I had mentioned to you how I liked the fact that the stock had tested the major moving averages a number of times, and I had gotten a shorter term alert on Friday that was triggered, and I wanted to use this as an example. And so you can see this is where the video came out Sunday. That's the price action since the video. So you had an opportunity to get in here, roughly $140, let's call it. Stock's been up to $152. Really nice pick. And it's important that you kind of grasp the concept that I'm going to be covering today, which is buy dips. Don't chase. And you can see how well this worked out. That's a $12 move in a handful of days. Go into the D1 chart. Barely even shows up as anything that you might get excited about. It's just kind of chopping around in this range, but those are actually very big gains. HUT, that was a stock that I highlighted in the live event on Wednesday. Please make sure that you check that live event tab. We've got tons of live events that we've recorded over the last 6-8 months. Those live events have lots of questions from you, and Harry and I go through each one of those questions. We review charts. Chances are that your questions have already been answered because somebody else had that same question. So please spend some time looking at those previous live events. And we're covering lots of stocks and giving our opinions, so you have the benefit of hindsight. You can go back and look at it and say, oh, these guys like this stock pick. Oh, they really didn't like that stock pick. How did it do? Because only when you go through and do that due diligence can you have trust in what I'm teaching. I think you're going to find that in almost every instance, our technical analysis was spot on. HUT. So the live event was done on Wednesday. Let's go into the 15-minute chart. And a live event was right in here. So, stock has moved higher. I'm not going to jump up and down about this. Hasn't been a great winner. you can see that the market really hasn't done much either. So let's get into some market analysis. But before I do that, I am going to click GTC. I'm going to click on that high. I'm going to click on that high. And if the stock breaks out above that, let's call it 1320 level, I want to know about it. And we'll take a look at the D1 chart. You can see how the stock has been able to move through the 50-day moving average, and it's above the 100-day moving average, and it's above this horizontal resistance here. I like it. The stock has had decent volume, so I'm looking for the stock to continue higher. It's got excellent option implied volatility. You can see the historical volatility here, almost at 1. The next earnings date is on 11/13. So you could sell an out of the money put naked on this down to probably the $12 level. That will be below the 100-day moving average. You're going to get some nice premium for that. You're going to have the 50-day moving average to lean on. You're going to have the 100-day moving average to lean on. You'll have accelerated time premium decay, really rich options. So I like that strategy. I think this could be a good naked put right. You have to want to own the stock at that lower level. Okay, that's critically important because there's a chance on a volatile stock like this that you could get a sign. So you have to put enough cash in reserve to be able to buy that stock on Reg T, 50% margin, and you have to be willing to take possession of the stock. If you're not, do not do that trade. If you are willing to, it's going to generate quite a hefty return. And I can take a look at where those options are currently priced. We'll go into option pricing, and let's take a look at we'll go a little bit further out in time, maybe the November 1st expiration date. And you can see the bid-ask spread on these options is a mile wide. So very tough to get anything off and to figure out exactly where these options are trading. So poor option liquidity. Forget the idea of selling naked out of the money puts on this. You really are in a position to only trade the stock when it's breaking out. So I've got my alert set. That's the only way that I would personally trade HUT is on a breakout through this previous high, and then I would just day trade the stock. So what is the market doing? It's not doing a whole lot of anything. We've got a really nice cup and handle formation here, and we are through the top of that cup and handle formation. That should be bullish. This big pop up right here, that was the FOMC reaction the day after the FOMC. The market got everything it possibly could have wanted. Powell came out and said our domestic economic activity is very steady, said that employment is solid. That's part of their mandate, is to preserve employment, and that's why they cut interest rates by 50 basis points. They felt that inflation had come in enough to where it wasn't a big concern for them any longer. It was almost within their target range, and they did not want to wait for softness in the jobs market. So they were proactive, and they cut by 50 basis points. Everyone was kind of expecting a 25 basis point rate cut. I was in that camp. Surprised me a little bit that they got to the 50 basis point rate cut, but it tells you that they're somewhat dovish now. The fact that the Fed is in the driver's seat, what does that mean? Well, it means that they're no longer handcuffed by high inflation. They have the latitude that if they see any signs of economic weakness, they'll be able to cut interest rates even further. And that's a good thing as far as the market is concerned. So why isn't the market moving higher? And this week, economic data points domestically, very important distinction, domestically came in pretty good. We had GDP came in line, durable goods were in line, PCE deflator was actually touch better than expected. So all those numbers were good. Now, one thing that we do need to be aware of is that conditions are fairly soft in Europe. And the ECB has already cut rates twice by a quarter point. Their economic growth this quarter for the entire EU could be 0.1%. So that's not even considering inflation. They're really teetering on a recession. So there's no growth coming out of Europe. The PBOC cut bank reserve requirements dramatically. They cut interest rates dramatically. We're seeing a big rally in Chinese stocks. I believe that is all fluff, and it's driven by a big short covering rally. And the Communist Party in China also does oftentimes require state-owned entities to purchase stocks. So I view this as nothing but fluff coming out of China. And we'll look at their index, FXI. And I believe that a short could be setting up there, but there's nothing there for us to look at until we see some signs of technical resistance and then actually a reversal, signs of a technical breakdown. And then I think there might be some opportunities on the short side there. But as far as our market is concerned, we've got major economic data points coming out next week. So the concern and the reason that the market has not been in liftoff mode, and this price action is also very telling. What have we learned? We've learned that on this breakout, asset managers were not gaga goo over the market. Oh, I gotta own them here. I gotta have it. The Fed is dovish. Economic conditions are solid. They're strong. Oh my God, this is the buying opportunity. This is going to set us up with a year-end rally from here. We're through seasonal weakness. Buy. That's the level of excitement that you want to see from asset managers. And when you see that on a cup and handle formation where there is demand, you've had the pullback, and they've demonstrated a couple of times that buyers are aggressive. They bought at a higher level here, and now we have that breakout. You would expect beautiful, powerful new highs. We're not getting that. So asset managers are not feeling that this is their last opportunity to get long here. They're cautious. They're tenuous. We've seen very little follow-through buying here. And my take on this is that at best, we see a gradual drift higher on light volume. And that can continue for quite a while, but it is a very low level of conviction when the volume is light like that. So I believe this is an area where we need to favor the long side, but tread very cautiously. So we've got major economic data points coming out next week. And the worry when the Fed cuts interest rates by 50 basis points is, what do they know that we don't know? 25-point basis rate cut would have been fine, and it would keep everybody thinking that, okay, well, we're expecting that, and now the Fed is a little bit more dovish. 50 starts to raise some eyebrows that maybe they do sense that there's some economic weakness. So the jobs numbers next week are going to be scrutinized heavily. So we've got JOLTS coming out, we have ADP coming out, we've got the jobs report on Friday. Those are going to be the major economic releases, and the granddaddy of them all will be the jobs report on Friday. Given what I've seen from initial jobless claims over the last 4 weeks, they've been coming in around 220,000. That is a low number. That bodes well for Friday's unemployment report. I think the jobs numbers are going to be pretty dang good. And so consequently, I believe the market will have that gradual float higher. Now, if the number came out really weak, let's say below 100,000, maybe even below 80,000, again, I'm not projecting that based on the initial jobless claims numbers. But if we saw that, then I think you're going to see a pretty severe market crackdown, because then the concerns are going to start to surface that, uh-oh, the Fed waited too long. And then you're going to start to see some profit taking, especially in some of the consumer sensitive stocks that might be more vulnerable to an economic pullback. So we really have to watch these numbers and see what's going to be coming out Friday. I still favor only having starter long positions on here. From a swing standpoint, I would not be more aggressive than that. And from a seasonal standpoint, I did say, oh, we're through seasonal weakness. Well, actually, that seasonal weakness lasts about 3 weeks into October. It's nothing that you trade off of. It's something that you are aware of, okay? Because sometimes you get the seasonal weakness and sometimes you don't. So right now, we've kind of made it through a good part of that seasonal weakness because we've made it through September. Still got to get through 3 weeks. We've got the election coming up. The polls are pretty much in a dead heat. So there's some uncertainty for the market. And the other thing that we saw last week that should have sparked just a little bit of buying is that Congress passed the continuing resolution. Okay, that's a good thing. Everybody expects the can to get kicked down the road, but it did. And then we also should have seen a little bit of fund buying. So end of month fund buying, beginning of the month fund buying. We've got some quarterly window dressing that's taking place. Really haven't seen any of that. If we go into the 15-minute chart, you can see, and let me zoom out a little bit, this is what we've currently got working. You can see this upward sloping trend line, and you can also draw an upward sloping trend line through these data points. You can forget that outlier, doesn't really matter, but what that does is it gives you a nice upward sloping trading channel. And the reason that this is important is because it tells you how you should be trading the market right now, particularly how you should be day trading the market. So you should not be chasing big gaps up on the open. And you know that because I've been telling you that for many weeks. We do not need to chase gaps up. We need to wait for that bid confirmation. The bid is going to be tested. And so you can see how that's a good entry point for the long side. Get a little rally on the open. There's your bid check. That's a good entry point on the long side. Here we had a day, this is Wednesday, you waited for the bid check and then the market couldn't even get through VWAP. So you're waiting. Now we're starting to drift away from it. There really wasn't any opportunity to get long on Wednesday. Maybe you could have found a really strong stock and gotten long. Okay. That would be the exception, and you would go very light on that. But your mentality right now is to just wait for those dips, especially when you get a gap up like this. Be very patient, and you finally got a dip on Thursday about midday, and then you got a nice little opportunity to trade the long side. Friday, again, we just kind of drifted lower and didn't do a whole lot of anything. So perhaps Monday, off of this low, market gaps up tomorrow morning, Monday, wait for that bid check, and if we find support at or above this upward sloping trend line, you'll have a nice little opportunity to try some long positions. The same thing applies to stocks. And so if you're kind of in the mindset of buying breakouts, oh, here we go. We just broke out through here, and now you start getting long in here. Now the market pulls back and you're kind of stuck in the position. So chasing these little relative highs, like, oh, there's a breakout right through. We're through the prior day's high. I'm going to buy in here. The market pulls back the entire day. So those are not good entry points. You have to buy the dips. And then when you get a nice move higher, like that. So if you're getting long late in the day and you're like, okay, well, that was the dip. I've got a nice little entry point in here. And if you happen to take an overnight on it, then you've got to exit that position into strength the next morning if you get that gap up. So same thing here. You get long in here, you're holding the position. I'm going to take profits on some of it. Maybe I'll hold some of it overnight. You get this gap up. Okay, the only thing you're really doing is taking gains on your long positions if you get these overnight moves higher. So you take your gains there. Lo and behold, that was a good decision. Very choppy, very tenuous move higher. This is not characteristic of a go-go bullish market. Yet, we've got this gradual little trend higher. So that means you should not be aggressively looking at the short side here. You should be favoring these dips and getting long on the dips and then sell into strength. Wait for the next dip, buy the dip, sell into strength. Wait for the next dip, buy, sell into strength. That should be your only mindset. Now, as we start getting through the week, what you can expect is, and by the way, I won't be doing a live event with Harry on Wednesday, but I believe he's going to still do a live event. So watch for that. And since I'm not going to be around, I believe that you're going to see fairly lackluster trading. We've got decent number of economic news reports coming out Wednesday. Then we're going to hit a little bit of a lull. I think Thursday is going to be kind of a dead day because everybody's going to be waiting for the unemployment report on Friday. And that has the potential to move the market one way or the other. I tend to believe probably toward the upside. So look for very quiet trading. Look for the market to really feed off of the news that's coming out right now. We're in constant wait and see mode. Market's so dang news driven that it's like you get one piece of news and we thought maybe the FOMC would be that big piece of news. And then it turns out to be pretty much a big nothing burger. And it's like, okay, well, what's next on the calendar? Oh, the jobs report. So the market just keeps looking for that next news event. And who knows, maybe after the jobs report, then we're waiting for the next CPI numbers or we're waiting for the election. We're constantly waiting for news to give us some sense of market direction. So I don't really like the price action in here, but let's take a look at how we might possibly approach this market. How might we find some decent trades? And I'm going to go into APP because I really, really, really like this breakout. When you get a breakout like this and you start stacking long green candles like this, look at the magnitude of that move from 90 to 130. They're apparently doing something very good with artificial intelligence and ad placements. Don't take my word for it. If you want to do some fundamental analysis, go read about what's got everybody excited. I only know that institutions are excited because I see this massive volume and these stacked candles. So once you find a stock like this that you really, really, really like on a long-term basis, you need to set alerts so that when the stock pulls back, you're able to identify the nature of the pullback. How brief was it? How deep was it? We want shallow, brief pullbacks, okay? We don't like them to be overly deep because that would suggest heavier selling pressure. What we'd like to see is a nice brief pullback, maybe to this 120 level right in here. So challenge these little gains where the market has floated a little bit higher and where the stock has floated a little bit higher. Tiny compressed candles. We're starting to get back to that EMA 8. So a nice little crack down here might spark a little bit of profit taking, and that's okay. It's okay, because what we want to do is we want to be alerted when we get a buy signal on one of these dips. But Pete, isn't the stock already on a buy signal? Yes, it is. So let's take a look at H1 because I really like using the 1 hour charts. And we'll go back and take a look at how the stock had previously set up. And in particular, when we get a sell signal followed by a buy signal, those tend to produce very, very nicely. You can see buy signal here, exit here, buy signal here. So right now, the system is saying stay flat. So it is technically on an exit. It's not on a buy. What I could do is I could say, hey, I want to right click, set an alert, tell me when this stock is on an H1 buy signal. So I'm going to go down to trade signals and I'm going to click on H1. And so when this goes from an exit to a buy, I'm going to know about it and I'll be able to evaluate it. Now, what could happen in between then? Does it mean that the stock is going to shoot higher and give me an instant buy signal? It could. Very possible. The stock could also pull back, go into a sell signal, and then a buy signal. Now that would be a more substantial pullback, and that would also give me a little bit longer time to evaluate the stock because it's going to take a while for it to go through that cycle and then to flip back into a buy cycle. I'd be very interested in that type of scenario to see how much of this move has been retraced. I know I like the stock. I want to buy it. So I'm almost hoping for a little bit bigger pullback. So what's the market doing in that time is another thing that I'm able to evaluate when I set these trade alerts. So another thing I'm going to do is I'm going to do it on a 30-minute basis. And so you can see on a 30-minute basis, the stock has actually been on a sell signal. I'm going to create an alert and I'm going to go in and I'm not doing anything with this stock until I get these alerts. But I don't have to babysit it. I can go and I can look at a bunch of other stocks that are also setting up very, very nicely. So yes, I like APP. That's going to be one of the stocks that I use this strategy for. Why don't I just go and take a look at all the stocks that are in a really powerful search? So for instance, heavy buying might be that type of search. So I can go through, we'll go into the D1 chart so we can take a look at what some of these stocks are doing. And I can see coin. That's a nice breakout through AVWAP-E. Still has to get through the 50-day. Still has to get through the 200-day. But yes, this is a nice little lift off. And I've got a little bit of a support line here. You can see an upward sloping trend line. Goes back very far. That is a significant trend line. Look at the touches. 1, 2, 3. That is a nice solid trend line. Nice bounce off of it. Got a low minus here as well. So this all looks pretty dang good. Maybe this stock had a nice little dip and it's going to get back on track. So if it has a dip and it preserves AVWAP-E, could be a good entry point for me right here, and then it takes another running start at that 50-day and that 100-day moving average. So take a look at MSTR. Hey, that's also nice. Let's go in and take a look at that H1 to see if we had any. We did. We had a sell signal in here, and then it went to a buy signal. Look at how nice that entry point was. So typically when you flip signals from a sell H1 and the initial buy, that's your reversal, that's a nice little entry point for us. And you can see what the stock did since then. Let's do the same for coin. Beautiful sell signal, flips to a buy signal. There's a nice entry point in here. Hey, that worked out very, very nicely. There's a sell signal, no follow through. Would I take that sell signal? No, not until we can get through that low right there. I need to have that technical confirmation, but it flips from a sell signal to a buy signal. Ooh, that was a pretty nice little entry point. So I've got an entire list of stocks here. All I need to do is I can right click on the header, create alert. And for all of these stocks, I'm going to be looking, and I'm going to go to a M30, and I'll tell you why in just a second. Show me when there's a buy signal, M30, for all of these stocks. Did you see how easy that was? Why did I pick M30? Well, because the stock is currently on an M30 buy. You can see almost all of them are on an M30 buy signal right here. I'll widen this out so you can see. And so that means, see there's M30, it means that it has to go negative. There's a couple that are already negative, and then it would simply go positive. These have to reverse that negative signal. These are already on a buy signal, so it has to go to an exit and then a buy signal. Show me when this happens. If I wanted to, I can take a look at a stock like this. Remember, I had mentioned that when it goes from an H1 sell signal to a H1 buy signal, that's probably going to be a pretty good entry point. Let's take a look at that. Oh, hey, that's a nice little stock. It's a cheap one. It's starting to get through the 100-day moving average, downward sloping trend line. So, on this one, I can just go in and say, create an alert. Let's go in, set the trade signal, and let's set it for a buy on an H1 basis. That would flip from a H1 sell signal to an H1 buy signal. We already know that's an attractive setup for us. So I can do the same with this stock, ASTS. And let's take a look at that longer term chart. So here you got a really strong stock. Man, that has been on a monster move higher. This stock is starting to pull back. Do I like this strength? Yes, I do, because it came on really decent volume in here. All right, well, right click, create alert, trade signal, bullish, H1, set it, and forget it. I don't have to look at this stock ever again. But I will get that alert, and then I'm going to be watching to see, oh, hey, did it find support at the 50-day moving average when it flipped? If yes, then I have a bullish flag formation. Maybe it comes down and tests the 100-day moving average and bounces off of it with a lot of conviction. Because these guys in here that were buy, gotta have it, they're going to be waiting for this dip to run its course. And when they feel that the stock has reached an attractive price point for them, they are going to be aggressive. And so I'm going to be buying the stock here, not on a breakout to a new all-time high. This is going to provide me with a nice entry point. And I know I don't have much of a market tailwind because the market has been super choppy also. It also has been in a mode where I need to buy dips. So that's the strategy that I'm going to be using. I can go into my green royal flush search. These are going to be some incredibly strong stocks, and I can do the same thing. I just go in, right click, create alert, let me know when these stocks go on to an H1 buy signal, and now I just wait for that to happen, and I set the alert. So again, in some cases, the stock's going to go from a buy signal H1 to an exit, and then I'll get the alert on that H1 buy signal when it comes up again, and I can evaluate the dip. Maybe it was just a little. I'd like to see the stock retain its relative strength. I'd like to see some pretty decent volume in it. It could also be that the stock goes into a sell signal and then flips to a buy signal. That's going to be a little bit deeper dip and perhaps provide me with an even better entry point. So when I get those bigger dips, I want to make sure that I have that super, super strong stock setup with that big tailwind. So ASTS would be an example of that. APP would be an example of that. Stocks that are really powering higher and not just kind of waffling around and chopping around. So that's the approach that I would be using this week. I like APP. I'm waiting for a pullback. I'm looking for an opportunity to get long that stock. I'm going to take a quick look at Win and a couple of others. I had mentioned to you that I felt China was very weak. So there is no shorting opportunity in China right now. I be really clear about that, okay? Because somebody out there is going to want to go out and go, Pete thinks China's weak, so I'm going to buy some puts. This is a short covering bounce, okay? This thing can be massive. It can just absolutely destroy short sellers. And you don't know how high this thing's going to go. More of a fundamental play, I'm looking at the destruction of wealth in China. Their entire middle class who had invested in real estate is one of the only investments that they had available to them because they had to keep the money in China. And right now, those property values are plunging. You've got a lot of the real estate developers are on the verge of bankruptcy. So the PBOC lowering interest rates and injecting liquidity is not going to help that situation. They currently have devaluation because people are hoarding money, they're hanging on to money. I believe it's one of the reasons that gold has gone up in price. They're buying jewelry that has gold because it's one of the few things that people feel that still retains its value. So they're not going to start all of a sudden spending a lot of money. China's retail sales have been weak. So I feel that this move is nothing more than a sugar high. Why did I pick on Win? I could have picked on any of these stocks. I just know that Win is participating in that short covering rally because it generates so much of its revenue from its Macau properties. But you can look at Alibaba. Look at that liftoff in here, and let's zoom out so you get an idea of what Alibaba's been doing on a longer term basis. Okay, this probably goes back to 2021 even. This is just a bounce, okay? And it has been a fantastic short for a long time. Baidu, BILI. I mean, you can just go right down the entire list of stocks. FXI is the index, and you can see how that has broken out to a new relative high right here. This is all short covering. Their economy is in very, very bad shape right now, and they don't have a lot of consumption within China to drive their economic growth. A huge portion of China's economic growth, I believe about 35% of it to 40% of it has been driven by real estate, by building. And now you've got incredible oversupply of it, and you have very little demand for it. It doesn't matter if they cut interest rates to zero. You're going to have very little demand for it. These buildings are sitting idle. They don't have people that can afford them in the first place. So big problems there. I think there's a good short that's going to be setting up in FXI. So watch for that. And so I am going to go into FXI. I'll set a couple of alerts because one of them is going to be GTC, and I'll just use the bottom of that candle. At very least, it's going to fill that gap there and that gap there. But I'll also be setting an alert on an H1 basis, and I'm going to be waiting for that to trigger a sell signal on an H1 basis. And when I get that, I'm going to evaluate. Again, it could be at a much higher level. It doesn't mean that right now this indicator is going to go from a buy here instantly to a sell. But when that happens, I want to know about it. It could go higher, 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 and then give me that sell signal. So I'm just going to have that alert set. Don't even need to look at it a second time. But I think that this is just a gigantic sugar high rally. So I am going to be looking for shorting opportunities in Chinese stocks. And it might not happen for a few weeks, might not happen for a month, but I'll be keeping an eye on it. Also, China does an incredible amount of business with Europe. Europe's economy is struggling, as I mentioned earlier, 0.1% growth. US is doing well. There could be a kicker also, because I believe that if Trump wins the election, he's going to put even stiffer economic restraints on China, increase tariffs. So that also would not bode well for Chinese stocks longer term. So keep an eye on that. And by all means, look at the strongest stocks that have been moving higher. Buy dips. When you get a market that opens higher, know that you are going to have a bid check. The market is going to come in. It is going to probe for support. When the market finds that support, that is where you need to have all of your strongest stocks already lined up and ready to go. And then you buy on those dips, and then you sell on strength. Buy dip, sell on strength. Buy dip, sell on strength. Do not chase breakouts. That's how you need to be trading right now. Thanks so much for watching, everyone. Harry's going to do a great job with the live event on Wednesday, and I will be doing my video next week, Sunday. Hopefully some of the stocks that I've set alerts on are going to trigger, and we'll be able to go back and take a look at how those entry points fared. Trade well. Please give this video a thumbs up. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.